Hi there, welcome to Kneppy Invest and welcome to another answer and reply video where I get to answer your questions and reply to your comments to the best of my ability. It is Saturday, the 17th of January 2026, and even though it looks like I'm in the desert at either dusk or dawn, the time is currently 8:40 a.m. So I am recording this video a little bit earlier than I usually do, and there's no reason behind that. I'm just ready. And that is one of the good things about doing this by yourself. You can record whenever you feel like it. And I feel like recording right now. Now, before we get into your questions and comments, when I wake up, the first thing I do is typically look at what happened on overseas markets, commodities, that sort of thing. And then I play Wordle just to get my mind rolling before I get out of bed. And then probably half the days I play Don't Wordle, which is the opposite of Wordle. So Wordle, you have to try to guess the word of the day, and Don't Wordle, you try not to guess the word of the day. And today was a special day when it comes to Wordle and Don't Wordle, for reasons I won't say right now, but I'll mention in tomorrow's video if I don't forget why today was special when it comes to those two games. And I also play SuperCoach, and my BBL SuperCoach team is doing really well. It's the final week, and I captained Steve Smith, and he got a century. So I don't really play it that full on, very casual when it comes to SuperCoach. I prefer to watch the games. Even when it comes to watching games, I'm very casual about it. And sometimes I just leave the volume off, put it in the background, and do other stuff. That's just me watching sport. I don't full on watch sport. It's usually a background thing for me. But I like playing games like that, where you just, Wordle, Don't Wordle, you play it once. And with SuperCoach, it's just I spend maybe 5 minutes on it. That's it. I don't really like games where you just play it. Like video games, I just can't do that. I get bored very quickly. Anyway, this particular video is not about me playing games and my thoughts on games. This is about answering your questions and replying to your comments. And what I'm going to do, the first question today is the same question as the last question last week, and that is from Fantastico, who says, is Peninsula still breaking out or broken? And the reason I'm talking about this is I did take a position in Peninsula. Actually, before we have a look at Peninsula, what I might do is have a look at uranium, because I did have a look at this last night. Uranium, this is spot physical uranium. Now we go to the daily chart. I do prefer to look at both time frames, but this is uranium, spot physical uranium. The chart looks really good. So I would say that quite a few uranium companies' charts are looking pretty good right now, like Paladin, maybe not Boss Energy just because of negative news recently. But this chart for uranium is looking really good. And that is spot physical uranium. But uranium, the commodity, the futures, looks pretty good as well. I just don't like the chart. I do prefer spot. So anyway, so just based off this chart, we would expect that Peninsula chart is looking good. And this is one of the reasons I took a position in Peninsula. It has been a beaten down company. I'm not the biggest fan of management, but this is a sort of situation where if uranium prices keep on going up, how could this company lose? And you could actually argue, well, management suck, and that's how they lose. But it's one of those situations where tide lifts all boats. In this case, if uranium prices go up, Peninsula Energy share price should go up. And we are seeing that. Now, the reason I've decided to talk about Peninsula is because this time last week, it hadn't broken out. It was trying to break out. The share price pulled back a little bit, but I like these little pullbacks. When it attempts to break out, share price pulls back, not a lot of volume, and then it started to rise. I took a position before the breakout, and yeah, the share price definitely has broken out over the last few days. But again, the share price movement of Peninsula Energy is going to be highly correlated to the price of uranium. If uranium halves, Peninsula Energy share price will probably more than halve. If uranium prices double, Peninsula Energy share price more than likely will more than double, and that is sort of ignoring any issues with the company itself, any structural issues. But the chart, that's my whole reason I bought, is just based off the chart, not only Peninsula, but also uranium. And this is probably the best Peninsula Energy chart has looked like for a long time. Yes, I did not buy the bottom, but that's the thing. You don't have to buy the exact bottom and sell the exact top. It's just about probability. At the bottom, I would have said, maybe now's a good time to buy, but there could be maybe a few more months of the share price going lower because there have been quite a few times when people probably thought this is the bottom. Like, for instance, November 2024, that was the bottom. Share price kept on dropping. Anyway, so it's looking pretty good. It's looking pretty good, I think. Looking pretty good. Okay, so let's go to your first question this week. And this is from Method 341. And by the way, I do get a lot of questions and comments. So if one of your questions or comments is not featured in today's video, it doesn't mean I don't like your question or comment. It's just I want to get maybe not a unique group of companies, but I want to talk about companies I might not have wanted to talk about in the past, or I haven't talked about in the past. A lot of times I will just include a question or a comment that's going to be fairly quick, that sort of thing. And for this instance, a company called IMDEX, IMD, is a company I haven't looked at much in the past, maybe briefly. So I thought, yeah, now's a good time to have a look at IMDEX, ticker code IMD. Now, Method 341 hasn't mentioned technicals or the chart or the company itself. So whenever I get this sort of question, my first thoughts would be, is IMDEX a high quality company? Now, because this was the first question, I sort of set it up. That's why I've got IMDEX already put in Fiscal AI. So whenever I look at a company, by the way, IMDEX, how would you describe IMDEX? It's a mining services company. Is that accurate? Here we go. IMDEX, drilling optimization products and sensors for the minerals industry. Yeah, so a mining services company probably is the best way to describe IMDEX. And mining is going through a boom period right now. So you would expect mining services to be going through a pretty nice period right now. And that is true. Just have a look. I do actually have my mining services watch list in TradingView, and the charts for most of these companies are quite good. Really nice right now. Now, the absolute truth can be applied to mining services companies alongside mining companies is they're cyclical. And the bottom of the cycle was 10 years ago. And we'll have a look at the chart in a second when it comes to IMDEX, and you'll notice that the bottom in share price for this company was in 2016. So that's something you have to be aware of. And straight away, because I would not categorize mining companies as high quality because of that cyclical and highly cyclical nature, I probably would say the same thing. Not probably, I would say the same thing about mining services. I wouldn't hold these companies for the long term. They're more like trading opportunities. Just trade it through the good times, and then if you like shorting, you short it through the bad times. Anyway, so let's just have a look at some of the financial metrics of IMDEX to determine whether or not I might classify this company as high quality, even though I said I wouldn't because of the nature of the company itself. But just because I wouldn't doesn't mean you shouldn't. So this is just the way I try to classify or determine whether a company is high quality or not. I look at revenue growth. First thing I look at is revenue growth, but you have to be aware that I do prefer it to be revenue per share growth, because that is a better indicator of whether or not a company is growing. Because if you own shares in a company, you want to see your piece of the pie growing. And a lot of companies grow through dilution and acquisitions, or acquisitions and dilution. And I've seen this time and time again. A company can grow their revenue significantly, but revenue per share growth is actually going down because of dilution. I think we saw that with Woodside. Yeah, I looked at Woodside the other day. Their revenue has been growing, but because of dilution, revenue per share has actually been going backwards. Okay, so revenue growth, we're talking about last 5 and 10 years. 10 years is actually a pretty good time period because that goes back to 2015, so near the bottom of the cycle. And we're talking about 11.7% revenue per share growth over the last 10 years. And earnings per share growth is actually negative 0.2%, but over the last 5 years, 13.4%. Over the last 3 years, negative 1.8%. So it seems like earnings can be quite volatile. If we just have a quick look at revenue growth, so this will include the bottom of the cycle. Yeah, there's the bottom of the cycle, 2016. I can't go back any further just because my subscription with Fiscal AI is only for a 10-year period. Anyway, so that's the bottom of the cycle, and since then looks good. So this chart actually looks really good, but you're looking at from the start of the period is the bottom of the cycle. Anyway, so it looks pretty good. The other thing I like to look at is just shares on issue, and you actually do that fairly quickly. Total shares outstanding, and shares actually have gone up. They've more than doubled since 2016. So that's the reason why the company has seen double-digit revenue growth, but earnings per share growth has been negative over the last 10 years because of a little bit of dilution. Next things I typically look at are gross and operating margins. Funny enough, I wouldn't have expected margins to be this high for this sort of company. 72.7% gross margins, 16.5% operating margins. Now, I don't know what the average would be for this type of company, but I would have expected to be a little bit lower than that. But that's fine. I don't mind those sort of margins. A 5-year average in return on equity and return on invested capital, both above 10%, but just barely above 10%. So everything apart from really earnings per share growth is pointing towards a high quality company based off my own definition. P/E ratio 38.8 seems a little bit high, but maybe there was a one-off when it comes to income in the last year or profits. And we can actually have a look at that, which I'm going to do right now. Was there just a one-off? It doesn't look like there was. And in fact, you can see the profit margins here are fairly low. 10% profit margins. Yeah, right there. No, actually more than that. Yeah, our profit margins actually aren't that bad for this type of company. Anyway, so it wasn't a one-off. So $55 million of profit in the last year, and the company has a market cap of $2 billion. So that is a little bit, that is the market's probably thinking that the company is going to experience some really good profit growth over the next few years. And if you look at the forward looking P/E ratio, it's 31.7. So the market is expecting some good growth in profit for all IMDEX. Anyway, so that is what I look at in terms of whether a company is high quality or not. I probably would never even think about putting IMDEX in that list, to be honest with you, just because of what they do. So let's have a look at the chart. And in fact, you can sort of cheat, and I do this a lot when I first look at a company. Instead of looking at the financials, I just have a look at the long-term chart. If they've been listed long enough, and I just have a look at the weekly chart. And a lot of times you can just determine whether or not a company is high quality just by looking at the long-term chart. And in fact, you can see maybe the cyclicality of IMDEX just by looking at this chart. Some high peaks and high troughs. Maybe we should say sharp peaks and sharp troughs. And particularly when the bad times set in, the share price can take a plunge. Now, I'm not sure if this is the same company. Maybe they're a completely different company, because according to this, they've been on the ASX for over 20 years. But during the mid to late 2000s, well, up until the GFC, share price went on a real big tear, and then the share price dropped a lot, went on another real good tear. Share price got to a high in 2012, and then the bottom of the cycle was 2016. So I would not be shocked if the share price reached a low, or was it June 2016? So I would consider the bottom of the mining cycle back then to be early 2016. So look, that share price found a bottom and was going sideways for a period of time. Yeah, it would have been over almost a 9-month period, and the share price has taken off since then. Since then, the chart looks pretty good. Chart looks pretty good, but be aware that this is probably a cyclical company, and times have been good for IMDEX for the last 10 years. And that's, oh, by the way, we'll have a look at the daily chart, because I wouldn't classify as a high quality. So for me, it's more looking at a daily chart for this, and the chart looks fine. The chart looks fine right now. It's in a nice little uptrend. Really, it's been an uptrend since early 2024. So we're talking about, what's that, 2 years. Now, that is the weekly chart. If you have a look at the daily chart, yeah, the chart looks fine. Chart looks fine, slowly going upwards. Yeah, so if you think, probably the best way to say this, if you think the good times of mining will continue for the next few years, there's a chance that IMDEX share price will keep on going up. But just be aware that if times turn tough for commodities or the mining cycle or sector, that the share price of IMDEX might drop a lot. In fact, I did own a company back in 2015 or 16 that did go bankrupt. It's the only time I've owned a company that went bankrupt. It was a drilling company, and quite a few of those companies went bankrupt. I learned a lesson. Liam Jones, hi Kneppy. Liontown is hitting a resistance point, but lithium is on an uptrend with a huge future ahead. Do you think this is breaking point or time to sell? Well, if you think lithium is an uptrend with a huge future ahead, do you think it's a time to sell? Anyway, let's have a look at Liontown. This should be looking, so I do own a few lithium companies. Share price of lithium companies have pulled back recently, not Liontown, however. So when I say some of my so-called lithium share price has pulled back a little bit, and nearly, it's probably a nice little buying opportunity there. Garland has pulled back a little bit as well, only a little bit. And Liontown hasn't, so I expected this one to have pulled back a little bit. Now, maybe that is showing a bit of strength. So the share price hasn't pulled back, but it's a beautiful looking chart. I do know there was one commentator on this channel who said lithium has no future at all. So you're going to get a wide range of different thoughts out there. I'm not sure why anyone would say that. Maybe they know there's different technology being developed that's going to supplant lithium. I have no idea. But just because, by the way, I don't have any thoughts when it comes to lithium in the long term. I just play the trend. At this point in time, the trend is pretty good for lithium, and pretty much a bull. Not ultra bullish, but this is one lithium company I sort of wish I owned at this point in time. Of course, there's hundreds of companies I wish I owned, but you should never regret any decisions you make unless you learn from them. Learning is a good thing, but not regretting. Because if you actually do learn from a decision, a bad decision you made, then maybe you shouldn't regret it, particularly if you can take that learning on board and make better decisions in the future. So even then, probably you shouldn't be regretting any decision you make. Anyway, so the chart looks pretty good for Liontown. Share price has gone well above the moving averages, but on occasion it does that. You can see back in late November, share price went on a really good run and then did pull back. So probably the only thing I'd say is share price is well above the 25-day moving average. And eventually share price would move towards that. But the share price could go sideways for the next few weeks and the moving average could catch up. That could happen. Or the share price could pull back, hit the moving average, and then go up again. So, there's no... Oh, by the way, you said resistance. So let's have a look at the weekly chart. Because in the daily chart, there's not much resistance. In the weekly chart, there is definite resistance right there because that is the breakout that lithium saw back in March 2023. And I'm pretty sure that was on a takeover bid with Jenna Reinhardt or something. I don't know. Or maybe Jenna Reinhardt put some money in. I forget what happened. Anyway, so that is a resistance spot for lithium. So if it breaks above that, and it tried to, if you go back to the daily chart, it tried to break above that level. It's trying right now. It is really trying to get above that level. So 4 straight days. So this could be a good sign. The share price, we're seeing some selling because exactly what you've said. It's at a resistance point. But the selling has not overwhelmed the buying. In fact, it's sort of like a very even battle between the bears and the bulls right now. And that's actually a good sign. But I would like to see the share price pull back to say $1.90 and then try again. And I think it'd have a better chance of breaking out. But this could be healthy, I think. We'll wait and see. Hutchie says, recently bought an LG from JB Hi-Fi. They're great to negotiate them down. I'm not sure when or who from who will I buy a TV from. Not sure. I haven't gone to that point yet. I'm just researching TVs. Running shoes, Hockers. I did try Hockers when it came to trail running shoes, hiking shoes. My only problem with Hocker was they didn't have any of the wide feet. I need wide shoes. So that was important. I need wide shoes. That's one thing I've realized. Okay. The main point of Hutchie's comment here is, can you look at EHang? EHang is a Chinese first to market urban air mobility eVTOL drone technology company developing autonomous aerial vehicles for passenger and cargo transport, as well as smart city UAV solutions. They have just attained CAAC certification. Only $1 billion markup. Love your work, Kneppy. Funnily enough, I watched a video out of this company just the other day. And maybe not intriguing to you, but intriguing to me is in the comment section, everyone was debating whether this company or their technology was a drone versus a helicopter. Yes, that was the main consensus, the main debate. Was it a drone or was it a helicopter? Anyway, it looks really interesting. My only problem with it on a personal front was the noise. It seemed like it was really noisy, but this technology is showing a lot of promise. I haven't looked at EHang at all. I can't tell you about the company. I would doubt the financials would be any help. It's listed on the Nasdaq. I doubt the financials would be any help because their future, this company is all about the future. It's not about the past. It's not about, you can't draw any conclusion about the long-term viability of this company just by looking at the past. They do have a little bit of revenue, it looks like. Anyway, so that's probably the my only exposure to this company has been through a video I watched because I am interested in new technology And it is something I've been thinking about lately, and it does look interesting. So the journalist got into one of their devices or machines, the only person in it. She was actually quite nervous because you have no control, but there are some machines where you can get control, but you have to pay a fair bit of money for that privilege. But she just got into one of these machines, the only person in it. You have a lot of these rotor things going around. It was quite noisy. And it went at, was it 90 kilometers per hour or something like that? Anyway, so this is a very exciting space. And I do know that Hutchie is really bullish on this company because there was another comment later on where he said this has a potential to be a 100-bagger. And I think it's true. I would also be shocked if Kathy Woods isn't really bullish about this sector. Kathy Woods and what do you call it? eVTOL. Is that how you describe it? eVTOL drone. Yeah, here we go. Kathy Wood doubles down on eVTOL 3 days ago. Let's see what she's been loading up on. She's been loading up. Is it this company? No, it's Archer Aviation. There you go. Anyway, so this is an interesting space. How big is it going to be? I have no idea. And maybe Archer Aviation or EHang are the companies to watch in this space. And sometimes when it comes to new technology, we just don't know which companies will be the winners, do we? So let's have a look at the chart. So that's all I can say about EHang. In fact, there's actually one thing I can do. Let's have a look at the most recent investor relations. So markup is $1 billion. Yeah. So let's have a look. This is a little bit late. So they will release their most recent quarterly results or numbers or whatever you want to call it in a few weeks, looks like. So this is from November. And that's one good thing about American listed companies is they report every 3 months. I know some people hate that. And in fact, some people wish companies would only report every year. I would hate that. Here we go. There is their little machine. And the thing is, I would say as we go through time, if this sort of technology becomes really viable, we're going to see the prices come down and come down and come down. And to be honest with you, one of the benefits of these devices, machines, is you can go in a straight line, can't you? You just go a straight line. Roads, they're curvy, that sort of thing. This goes in a straight line. It's just maybe some people would be a little bit more nervous riding these machines because it's flying. Okay, sales and deliveries of electric. By the way, the other thing I do remember them talking about is their major customers are like it's not really retail, it's more like government and commercial at this point in time. Maybe something else as well. Sales and deliveries 42 units, including 41 units. So they're not selling a lot right now. Revenue of 92.5 million RMB, which is, because I'm assuming they're a Chinese company, 92 million RMB in USD. So that is, what's that, $13.3 million of revenue. Maintained 4-year revenue guidance of 500. So we're talking about $65 million of revenue for the full year. And more than likely, expanded global footprints in Qatar, Japan, Kazakhstan, and Rwanda. Oh, that was something else. Was it this one or something else where they were delivering medicine to places in Africa via these devices or something like that anyway. But I do watch a lot of videos on new technology. So maybe there was something else completely. But I do remember places in, it could have been just drones maybe. Maybe it was just drones, like little villages, remote villages in Africa were being sent medicine via drones or something. Or maybe it was this. I have no idea. Can't remember now. There it is. You can see a nice little device. VT35. Anyway, there we go. Rwanda, I can't believe, completes Africa's first ever human-carrying flight of pilotless eVTOL aircraft in Rwanda. Oh, that's the other thing. They're pilotless. So, and if you do get in trouble, that's the other thing I remember. The journalist was actually quite nervous, and she just mentioned if you do get in trouble, you can call up someone and they could guide you through whatever. Yeah, so I would say it's quite safe. And I'll be honest with you, I do prefer non-pilotless Just like I do prefer non-driving, because people make a lot of mistakes. I'd say the vast majority of car accidents is because people make mistakes. Maybe that's just me, but I do prefer. Anyway, so let's have a look at the chart for this one. It's listed on the Nasdaq. This is maybe one where you just see the chart here. This is the daily chart. Nothing really happening, and I'd say wait for a breakout. Now, that's just me having less conviction than Hutchie. Hutchie obviously has really high conviction about this company. And that's the thing. You can't, what's the saying? You can't transfer, it's really hard to transfer conviction. So if you have really high conviction, it's really hard to sell that conviction to other people. You have to develop that conviction yourself. So Hachi obviously has really high conviction about this company. My conviction, just because I don't know much about this space and this company, my conviction wouldn't be that high just yet, but maybe it will change. And I do think conviction is best earned by doing your own research. Fantastico, on Micron, I remember reading that memory chips are commodities that follow supply, demand, boom, bust cycles of semis, much like mining. That is absolutely true. They're cyclical, but the one big difference, maybe it's more big differences between the two type of cycles, but the one big difference between memory chip cycles versus mining cycles are memory chip cycles tend to be really short and sharp. So maybe 1 or 2 years, but mining cycles can 5, 10, 15 years or so. So much sharper cycles when it comes to memory chips. And I do think we're in a really upward cycle right now. And eventually that cycle will turn a little bit negative and then the next cycle will go up. So that's the one thing. One difference between the cycles of the two is what do you call it? The length and sharpness. I don't know. Short and sharp. Paul LY says, can you share your thoughts on Novonix chart? And Nirvana says, I think a breakout above 60 cents is more likely to be bullish. So let's have a look at Novonix. The one thing I do remember about Novonix's chart is the volatility. Yeah, recent volatility. Oh, in fact, the share price yesterday down 15.84%, which confirms the volatility in this chart. Now, one of the reasons I do think there's volatility when it comes to Novonix chart is the lack of any substantial revenue or cash flow, well, the cash flow negative. And when I say meaningful, I mean meaningful any sort of growth. Okay, so they do release a pennies for seas. In fact, I can show you if I have it up here somewhere. I do have I probably don't. Oh, it's got to open up. Oh, it might take a while. Oh, they did release something yesterday. I missed this one. Operations update, Panasonic energy offtake. That's probably the reason why the share price dropped, huh? There you go. I missed this one because that was probably around the time I started recording. And I haven't looked at announcements released after I started recording yesterday. So this is maybe a reason why the share price dropped. Let's have a look. Expected timing for commencement of mass production of anode for its lead battery material customer. They still expect mass production this year, but maybe it's a little bit delayed. Now expected second half. So that's maybe a bit of a delay. And the market doesn't like delays like that. That's probably why the share price has sold off. There you go. So there you go. So it shows you sometimes you can miss announcements just because of when they are released. And that's probably a good explanation why the share price is down. But the main thing I have with Novonix is I'm just waiting for proof of concepts in regards to technology. Now, I first started following Novonix. There was a period here, yeah, it would have been middle to late 2020. There was so much interest in this company. In fact, the share price popped up around the time of Tesla's thingy. What do you call it when they have the yearly thingy? And that was it late? No, it was 2020, I believe. Yeah, in fact, it would have been September, 23rd of September 2020. 23 September 2020, Tesla, what do you call it? Investor Day or something? Battery Day, that's what they call it. So on that particular day, the Novonix share price just went bananas. In fact, you can actually see the share price of Novonix open up significantly high that day and then dropped probably from the peak to the trough of 40%. Yeah. So share price actually went down 40% from the highs to the lows. And that's because of the battery day. I don't know what happened, but that negative sentiment didn't last long. So that's when I discovered Novonix. And Novonix really hasn't grown in terms of its receipts and revenue, still has promise. But this is the sort of chart of a company, like a story stock, a company that has a narrative. And you're going to see a lot of volatility. And really, sentiment drives the share price of these companies up and down. And that is what's happening with Novonix right now. It's just sentiment is driving the share price wild, and a little bit of negative news as well. Now, maybe you could say if the share price gets to 40 cents or so, or below 40 cents, will be a nice buying opportunity. Because if you actually put in a little purple box, sometimes I like to do this, purple box, if I can find it though. Where is these purple boxes? No, that's not it. That's not it. That's it. The reason maybe that purple box is that has been, so that's the share price between about 40 cents and 32 cents. Whenever the share price of Novonix has got into this purple box in the last year, we have seen a little bit of buying coming in. And but be aware that if you have a look at the long-term chart, share price has dropped a fair bit. And this was a really favored company on this channel when I first started. Novonix share price got above $12 at one point. Now it's, what is it? Was it 40 cents? Just above 40 cents. And that's the problem with these sort of companies is sometimes you do have to wait. You have to be patient and wait. And in the meantime, share price can drop a lot because the market sometimes is not that patient. Anyway, so the chart itself is meh, but it is moving towards support zone. Chief says, can you please do a TA on Qoria? Brokers are rating it as a strong buy. There is a lot of people, a lot of brokers, fund managers quite positive about Qoria. And then you have a look at the chart, and the chart is looking a little bit dicey recently. Oh, it's at support. It is right on support. So if you're very bullish on this company right now, it could be a good time to buy it. So, or maybe not bullish. If you don't mind trading, and you really determine the risk reward structure of a particular trade, this could be a really good risk. No, this could be a really good reward or potential reward versus low risk. So high reward, low risk. And the reason I say that is because it's right on a support level. In around about 50 cents is support, and the share price right now for Qoria is at 52. So right on support. And you think, yeah, support's going to hold, share price could rally from here. And if it doesn't, share price drops below 50 cents, it's sort of a sell and you wouldn't lose much. But the potential upside could be quite big. In fact, I wouldn't be surprised if the upside, particularly if we start to see sentiment in tech shifting from negative to positive, the upside potential could be multi-bagger from here. Downside is quite small. So this could be a potential high reward, low risk sort of trade right now. Now, the question was only about TA, so I won't mention the company at all. It's just a technical analysis question. Oh, Just Acronym. Okay, so I'm doing a lot of research in TVs, OLED. So Just Acronym says Sony OLED is still the best. LG OLED are left over from Sony. Don't buy mini LED, quality is SHIT. Mini LED. No, I am definitely going towards OLED, but I've done a lot of research on this. And LG did not develop the OLED technology, but they're the main company when it comes to OLED. In fact, they sell their OLED screens to Sony, which I discovered. So you might think Sony OLED is the best, but they get their screens from LG. And I actually did just Google it before I started recording, so I saw this question. And yeah, I confirmed it. I did confirm. See if I can, yeah, here we go. Does LG sell their OLED screens to Sony? Yes. LG Display sells its white OLED panels to Sony, who then uses them in many of their Bravia OLED TVs. Yeah, that is something I did read about. I just want to confirm that because sometimes you read something and you just believe it's true, and sometimes it's not true. Still, people believe. Actually, I won't get into any sort of political thing. Anyway, I won't get. I was going to say people still believe that vaccines cause autism, but it's not true. It's been proven. It's not true. But still people believe that because they read it or someone told them many, many years ago. Anyway, so LG is a prime supplier. Funny, the other thing I read here was that, no, there's something else here that I found interesting. Yeah, panel manufacturing is specialized in brands like Sony, which don't focus on panel production, source them from display specialists like LG Display and Samsung. So I found that really interesting as well. Anyway, so Sony don't develop displays. They buy them from, LG and Samsung. Anyway, so I still haven't figured out which TV I'm going to buy. It's still like a month before I will come to that decision, but it will be one of my first purchases. Young Gun says, thanks, but you need to also show the charts. Yeah, I can do that through the year. I think someone mentioned that. Yeah, the charts on some of these are awful. Yes, the charts are awful. That is true, but we're talking about a 1 year period. And I would say some of these charts, because the share price has gone down a lot, people are expecting a bounce. And it has maybe, I was going to say it's been proven, but maybe it hasn't. But a lot of times when a company's had a bad year, there's a better chance it's going to have a good year the next year. I'd like to do research on that. See if that is true, that the worst performing companies 1 year can be the best performing companies the next year. And I believe some people have that thought. David says, Kneppy does a lot for us. Let's not demand too much. And Sensei says, highly likely all charts will be shown in the monthly update. Yeah, so that's actually exactly what I'm going to do. What I'll do is I'll do a monthly update of these companies, 27 companies, and I'll be focusing on the charts. Looking for turnarounds, that sort of thing, and also the performance of the portfolio. So even though I did not look at the charts for this particular video, it was just giving you the companies. And then, in fact, what I'll do is I'll develop a watch list, which I haven't done just yet, and then put all these companies in and then have a look at the charts. So look out for that if you're a member. Oh, this is a really interesting suggestion from Ayaz Rahman. I didn't really think about this until I read this particular comment. I was like, actually, it could be a good idea. And let me just read it. Small suggestion: instead of putting equal weight on the equal capital on the stocks like last time, the capital should spread according to the ratio of the picks, meaning more capital should be allocated to a company that got higher votes compared to the least picked stock. I actually think that might be a pretty good idea. So, for instance, was it WiseTech or CES? I forget which one was the company. Telix, WiseTech, Telix. They had a lot of people choosing that company, so there should be higher weighting to that. So instead of equal weighting, it should be like market cap weighting, or in this case, picked weighting. And so that is definitely a potential thing I might do. Might do both, and maybe I could do both. Track the performance of the portfolio. Equal weighting versus a sort of a, what do you call it? A non-equal weighting. Yeah, I could do that. Oh, okay, yeah. So there's been a little bit of, because I've been doing the timestamps via Gemini, but I've transitioned to ChatGPT because ChatGPT does a better job, in my opinion, when it comes to timestamps. But on occasion, it gets it wrong. So, for instance, I always have to change it from Kneppy Invest or to Kneppy Invest because it's always Weppy Invests or NEP I Invest. So sometimes it gets things wrong. And I have been doing quality assurance, quality control, and sometimes things get through me. But I'm paying a little bit more attention to that. Yes, so this was like the first time I realized it doesn't do an absolute 100% good job. But it does, I'd say 95% pretty good. But I do, and the other thing is I have to sort of tell it in what sort of structure, because initially it was giving me like 30 to 40 timestamps. I don't want that many timestamps. So now I'm getting to the point where I can actually prompt ChatGPT exactly how I want it. It also remembers, which is really important. So I've told it that my name is Kneppy and how to spell it. And then I'm also telling it, because sometimes it gets the T codes wrong or the name of the company wrong. And then I tell it, you've got this company wrong. And then it remembers that for the future. Anyway, Dev Shaw, thanks, Kneppy. I believe Clarity and Telix only overlaps in their prostate cancer offerings. Also, Clarity is more about theranostics versus Telix is more about diagnostics, if I am not wrong. So Telix gets most of their revenue, if I'm right, through diagnostic, but they would refer to themselves as a theranostic company because they have a lot of therapy in their pipeline. So Theranostics is combining therapy and diagnosis. Diagnostics is just diagnosis, and therapy is just therapy. I think I've got all that true. But if you have a look at Telix Pharmaceuticals' website, and I actually did have a look at this earlier, they actually mentioned they are a theranostics company. Yeah. So here we go. Well, where was it? Yeah, Telix is a global commercial stage biopharmaceutical company focused on development and commercialization of therapeutic and theranostic radiopharmaceuticals. So I'm pretty sure theranostic is a combination of therapeutic, that's the word, therapeutic and diagnostic. So therapeutic is therapy, diagnostic is diagnosis, and theranostic is a combination of the two. And they've mentioned they are a theranostic company. Most of their revenue, if I'm right, comes from diagnostic at this point, but they want to transition into theranostics. And Clarity, the difference between Clarity and Telix is you're right about the prostate cancer. And that's one thing I do like about Telix. They are diversifying and they have a lot of stuff in the pipeline, but it's just the isotopes they use. Clarity uses copper, something copper, and Telix uses something starting with G. Oh, what does Telix use? Not gammon, that's terrible. Prostate, Telix, what isotope? Telix use. I'm going to kick myself when I see this. Not, oh, I spelled that wrong. It's oh, no, it was something else. Maybe I need to look at Telix's, what do you call it, presentation, one of the most recent presentations. They did release a presentation recently. Oh, share price is up. Here it is, yeah, 12th of January, just not long ago. They had a presentation. I do like presentations for companies because I am lazy. And one thing I don't like about American-based companies, not American-based companies, but American-listed companies, is they don't have a lot of presentations. And anyway, so let's have a look. In fact, they even mention here theranostic. They better mention the isotope. Come on. Gallium, that's it. Gallium. I'm pretty sure it's gallium. Anyway, gallium and Clarity uses copper. Gallium. I'm not going to forget that now. What is a reason? Sensei says, what is a reason you lately speak highly of quality ASX stocks that each have a low number of shares issued? IME, RHI, CHR, CHL, RCL, EZL, HCH, AUA. My only question about this is I would not define many, if any, of those companies as high quality. So I think when it comes to, that's probably my first little issue. The other thing when it comes to shares on issue is it's a balance. You don't want too few, but you don't want too much. And also that's determined by your size. For instance, a company like NVIDIA has 20 billion, 30 billion shares on issue. They probably need that many shares on issue because they're so big. So you don't want too many shares on issue if you're smaller. Like, so for a company that has a market cap of, say, $100 million, you don't want 20 billion shares on issue because the share price will be too low. So I think it's a balance. You don't want too few because you want a little bit of liquidity. And liquidity is determined by shares on issue. It's also on how many free float shares there are, or floated shares there are, because maybe insiders own 50, 60, 70% of shares. So you want a lot of shares that are traded on the ASX, but you don't want too much. So it's a balance. Ideally, I do prefer to see like between 50 and 100 million. Yeah. I don't mind 181 million. So all these companies are listed have that sort of range where I do prefer. Once we're talking billions, again, I think it's the size of the company that matters. But if it's a smaller company, when I see billions, I tend to stay away from those. By the way, the other thing is, I have a look at one company. God, what is it? What is it? There's a company. Is it Corvest or is it Supply Network? Maybe it's both. Yeah, so Corvest has 11.83 million shares on issue, and I do own Corvest. It has been illiquidly traded in the past, but it's not that illiquid now. Corvest. And by the way, Corvest should release their results in the next 2 weeks, half-year results. If we go back quite a few years, Corvus was illiquidly traded. It's not badly illiquidly traded, but definitely if you go back to like 2017, this is a chart of an illiquidly traded company. And one of the reasons behind that is a low number of shares on issue, but liquidity has improved. In fact, I have no problems with liquidity of Corvus right now. It's actually a nice looking chart. And I'm pretty sure Supply Network is the same thing. They don't have a lot of shares on issue. 43.75 million, yeah. Market cap is 1.5 billion. Okay. Hopefully I've answered that question. Kelly Ma says, is Pack Gold a clear breakout? Pack Gold a gold explorer and developer? I actually did a small amount of research on this company maybe 3 or 4 years ago because they either bought something or had a project towards the northern part of Queensland, which I did find interesting. And then recently I had another look at the company and it seems like they have either got out of that project or they've bought something else because they were mentioning something completely different. Here it is, imminent gold production and cash flow from White Dam project, which I don't think is Northern Queensland. Those are the vibes I got. Yeah, South Australia. Yeah, that's probably why I got the vibes. So what drew me into this particular announcement was near-term gold production and cash flow. I went, ooh, hello, Pack Gold. Had no idea you were at that stage. So it looks like they have maybe diversified. And they also talk about antimony here at St. George. So it looks like they have, diversified. Do they even talk about that project? Oh, they acquired this one not that long ago. Completes White Dam Gold. I should have a closer look at this because this is something that can be company making or company changing. Just going to have a quick look at their most recent investor presentation, 12th of November, one of the most recent. I just want to see if they still have their projects up north. And as that opens up in ComSec, because ComSec is slow, here we go. I'll just put in the chart. Noosa Mining Investor Conference. Let's just see if they have any sort of maps. They're talking about the White Dam project. First 12 months, fast track to cash flow. So this company is looking really more interesting right now. And they do, yeah, here we go. Oh, Alice River, that is what it's called, Alice River Gold Project. So they still have that. And looks like that St. George Gold Project is now including antimony. Okay, let's have a look at the chart. Ooh, and look at this chart. So I should have been paying a little bit more attention to this one because they did release something I liked and the share price has taken off, really taken off. I do like what they're doing in a rough look. I've had a rough look, but I do like maybe they've pivoted. Market cap of the company is only 48.91 million, and I like the volume increase. So share price sort of shown first signs of breaking out back in October, but there was the first signs, nice increase in volume, and then the really big volume came in on the 12th of December. Was that a day they released anything? 12th of December? No. So just a big spike in volume, and that was the bottom. And the share price has gone up since then. So again, this is another case where volume has preceded price action. Anyway, thank you for that, Kelly Ma, because I had not been thinking. I saw the announcement and then I completely forgot about it. Pack Gold, which sometimes happens when it comes to announcements. I can see an announcement I like and then I completely forget about it because I don't write it down. By the way, share price has run up a fair bit. It's doubled since the share price has rallied. I'd love to see a little bit of a pullback. If it pulls back to 10 cents, I'd be really interested. Put it that way. Joanna Scriven. This is something I would never do. Joanna has guaranteed Hillgrove Resources will double in price. Am I going to hope that doesn't happen? No, because I am trading Hillgrove right now. But this was something I would never do. I would never guarantee anything doubling price or tripling or quadrupling. It's just something I don't do because I never get to the point where I have that sort of conviction. I always think anything could happen. Anything could happen. Copper prices, maybe there'll be the largest copper discovery ever found, like 20 trillion tons of copper, and the price of copper will just plummet because of that. Who knows? Anyway, Joanna has deep dived this stock. No debt, double expansion of 30 million in the bank with 100 odd million cap. I bought 100 grand at 3.6 cents and it will ride easy past 12 cents. Watch it 12 months. I'll be vindicated. And MMM or by the, who wrote that? Crash Test Dummies. Remember that song, 1993 or something? I'm in at 3.7 cents. It should rock. So I am trading Hillgrove. And the main reason is I don't have this confidence in the company just because I just don't. Funny enough, we have gone from PGO to HGO. Anyway, so Hillgrove Resources is a copper play. And it was just a breakout. I believe I bought before the breakout. This was another case where I bought on the pretense of a breakout. Let me just confirm that. I can see exactly what price I bought. Sometimes I should put what I bought into TradingView. I do that, but then I forget, and I'm lazy. And let's have a look. Superhero, transactions, Hillgrove, if I can find it here. So I bought at 4.3 cents. So, I bought on the breakout, looks like. So it looks like I bought on the 29th of December. Is that right? Yep, 29th of December, 4.3 cents. So I bought, looks like on open. So I must have thought to myself, it's breaking out today. And that was a good decision on my part. Anyway, so the other reason I really like this chart is the volume. Look at the massive increase in volume. Again, looks like volume has preceded price action. And someone did question why I would be buying Hillgrove before I bought because the chart wasn't looking good, but it was just potential at that point. And then when I got sort of wasn't confirmation of a breakout, but I thought it was going to break out. But I don't have that confidence, Joanna. Roggle Dawn, A4N, Alpha, I'm pretty sure this is Alpha, is on the way back up. It's been trading with a consistent band for some time while investors wait for the plant to be built. Alpha 4N, which is a HPA, is that what you call it, HPA? Although I get this one confused with another company for some reason, which is high purity alumina. Do I have that right? High purity alumina. Let me see if I got it right. I wouldn't say I've been following this company for the last 5 to 8 years, but the first time I looked at this company was probably about 5 to 8 years ago. And I doubt they've got to the point where they're generating any cash flow. Where is it? High purity alumina. Yeah, it's high purity alumina. So we're talking about 99.999% purity alumina, and they sell that to phone manufacturers, stuff like that. But I don't think they have started yet, but looks like they might be getting close. Burning through a lot of cash, that sort of thing. I wonder what the market cap of the company is. Yeah, it's close to $1 billion. So a lot of potential already priced in. This is probably, for me, more like a trade. If I see the share price taking off, potential trade there. Not there quite yet. You can see the share price really has been trendless for a long time. And probably the best way, I'm not sure what the best way for this to move into a really good uptrend. If like the market was $100 million, which, yeah, it's if. You could play the if game all day long. But if the share price or the market cap was $100 million, I'd be more really keen on a trade here. But at this point, what's the upside here? What is the upside? That's the other question. What is the upside? That's probably the best way to put it. If the market was $100 million, I'd say there is a lot of upside. When the market is $1 billion, what sort of upside are you looking for or can you count on? And the reason I say that is I am looking for 10 baggers. That's the thing I'm looking for. So could the market cap of this company go from 1 billion to 10 billion? Maybe, but it's probably much easier to go from 100 million to 1 billion. And the share price doesn't look like it's done anything. Ooh, the longer term looks okay. So to get on this is probably when I first started following it, back in 2018 or somewhere, and the share price was like 12 cents. It's gone up a lot since then. So I should have been more keen on the future of this company, it seems like. Anyway, so Roger also says, for the plant to be built, consistent plan for some time while investors wait for when is a plant going to be built? That's fairly important. Adrian, I bought a position into Appen as per the chart, even though the management of this company is poor to say the least. And I just wanted to point out that we're like brothers, Adrian and I, because I bought also into Appen based off the chart. And I do feel dirty doing it. I don't know why. I just feel dirty doing it, but I shouldn't do it. I just like the chart. And the reasons I like the chart is, I think I've pointed this out. The share price took off on the 19th of December over a 2-day period. Then share price went sideways. I like that. Love when that happens. That means there's no selling. Well, there is selling, but you know what I mean. The amount of there's not enthusiastic selling. And then the share price went up on the 2nd of January. We all have these really good days. And look at the volume increasing as well. I don't know what's happening here. I don't know if this is just traders getting really excited, but something's happening and I just am dirty. And my one concern about Appen is when they do release a quarterly, because the company releases their quarterlies now, they've been asked to by the ASX. And whenever I see a quarterly from this company, I go, eek. And let's have a look at the most recent quarterly. Could it be that the market thinks this current quarterly is going to be really good? I doubt it. So this is the most recent quarterly, burning through cash. Now, a lot of receipts, but burning through a lot of cash. But it's just a chart. I just saw the chart and liked it. Nice says, thanks for your excellent videos. You're welcome. I wanted to know that when you did get the confidence in your strategy to buy breakouts after positive financial news in your financial journey, do you find that it works in downtrending as well as uptrending market situations? So, how do you answer this one? Do you find that it works in downtrending as well as uptrending market situations? No. If a company's share price is in a downtrend, a well-defined downtrend, well, that's not a breakout then, is it? So my strategy is buying breakouts after positive financial news. So if a company is in a downtrend, then there will not be a breakout. That's the point. So what I'm looking for is a share price. It used to be a 6-month high, but I'm willing to now say a 3-month high, but I do prefer the 6-month high. So what I'm looking for is a share price breaking out to a new high. And the main reason behind that is because of the psychological nature of trading and the investors. So humans have this issue when if the share price drops, as soon as they buy in, it's a dog stock and they have to get out. So that's why if a share price is dropping and the company releases something really good, the share price doesn't necessarily go on a tear. It doesn't go into a new uptrend because there's a lot of resistance. And it doesn't matter if the announcement is really, really good, because a lot of investors don't care. They just see the share price dropping, go, I got to get out of this. They see the share price pop up and they see that as a time to get out. And they usually sell on market, and that sends the share price down. And that is why sometimes when a really good example of this is Gentrack. Really good example of this is Gentrack. So the company share price had moved. What is happening here? There we go. Share price was in a downtrend. They released something really good on the 24th of November. Share price popped up 20.57%. You can see share price going on a run after that. But this is not a buy for me. And then, look, the share price is now below where it was on the day the share price broke out. And the main reason behind that is there was a little bit of enthusiasm buying for like 5 straight days. And then with the share price getting up towards $10, all these shareholders have bought at high prices over the past 2 years almost. They went, ooh, the share price is getting up. I should probably sell at a smaller loss. And that selling pressure has put pressure on the share price, and the share price is still in a downtrend. It's still in a downtrend. And I see this continually, this sort of pattern continually. Nice announcement, share price pops up, and because the share price has been in a downtrend, we see selling pressure, and it's just psychology on the market. So what I look for is breakouts, preferably on positive financial news. What's the most recent one? Let me have a look. I'll have a look at a recent. In fact, what I'll do is I'll go to what I want is a breakout on positive financial news. Flight Center, okay, this is a different one. So they released some positive news, I think it was the 11th of December, but there was signs of breakout before that. And this is a case of me getting in before the breakout. Because on the 28th of November, maybe there was something positive on that day. Share price went up, what was it, 6.54%. And then the next 7 trading days, share price went sideways. And at this point in time, the share price was at least a 6-month, well, it was on, yeah, it was a 6-month high. And then the company did release something positive on the 11th of December. I can't remember exactly what. I was going to look at 28th of November. I can't remember if they did release. What was it, 28th of November? No, they didn't. And then, yeah, that's right. On the 10th of December, amended guidance, it was a positive update from the company. And that's why the share price went up another 5.37%. And you can see what happened after that. Share prices went sideways because you still got a little bit of resistance, but there was enough buying pressure that the share price didn't drop. And then all of a sudden yesterday, share price popped up 3.36% and got above a resistance level. But there's still a little bit of resistance moving forward because the share price has dropped a bit. But this does look like or has the qualities of a nice little turnaround for Flight Center. But even though I did not buy on the announcement, it was just the chart I bought on. And then the company did release something positive. And sometimes you'll see that. Sometimes the market gets a little bit, not early, but the market will send the share price into an uptrend and then the company releases something. It doesn't mean it's loose lips. It's just that you get analysis out there, people who understand the company, and they go, hey, I think this company is doing better than expected, so we should start buying some stock. And I think that's maybe what happened here with Flight Center. And that's why the share price started to break out before they released the positive announcement. And the reason why the share price didn't go up straight after that is because there is a bit of resistance. And all of a sudden, that resistance is weaker now, and that's why the share price looks like it has broken out yesterday on the 16th of January. So, yeah, so I don't know if that's a good answer to your question, but I do look for positive financial news in a breakout. So when a company's share price is at a downtrend, In fact, if the share price of a company is in an uptrend and the company releases something really negative, that is almost an automatic sell. So what's a good example of this? Redox is a really good example of this. And the reason I'm thinking of Redox is because the share price is now in a nice uptrend. This company was in a bit of an uptrend until they released results in February. I was trading it. I got out straight away. And the share price then went down a fair bit after that. And now it's turned around. So it's taken 1 year for it to turn around. Just acronym. Hi, Barry. Last 2 days were good for ape. Did I say my name was Barry, or is he speaking to someone else here? Did I have a joke? Let's have a look at Eagers Automotive, because the chart for this one was looking negative. And so for me, I don't mind this little setup. Share price had dropped a fair bit, and then all of a sudden we've seen a little bit of a run. And I could actually see this moving up from here. Put it that way, I can see this moving up. But they will release results in February. There could be an update to how they're performing. And I would say there are some people who might be nervous about some of their holdings, because if a company has a bad update, share price will go down a lot. But if they release a good update, share price will go up a lot. So I would say there are probably some traders who won't be holding many companies who will release results because of that potential downside. But there's also the potential upside. But I don't mind this for ape. It's just a valuation of the company at this point in time. Sideburns says, Parenti, nice chart, potential breakout. I think this broke out many months ago. And yeah, I was trading this at one point and then I got out, and I just should have just held on. And yeah, I can definitely see why. For me, a breakout, I'm going to say this. For me, this is more of a continuation of the uptrend. For me, a breakout is a company whose share price had been a downtrend or going sideways, and then you get share price getting to a high. So technically, this is probably a breakout, But for me, this is more of a continuation of a trend. And if you are trading Parenti, this could be sort of a, you could buy additional shares as a trade. Yeah. So you add up, how do you phrase that? You add to your position. This is a sort of a potential add to your position trade for Parenti. So again, I don't mind this chart as well. And don't forget, Parenti is a mining services company, and good times right now in mining, but good times eventually will come to an end. So be aware of that. Medical investor looks like RAC ready to move higher. Race and Oncology, I am assuming. We'll do this one fairly quickly. Oh, have they changed the name to Racura? I'm sure they used to be called Race. Did they change their name? Or am I just an idiot? Change of company name. There you go. 9th of December. I'm not an idiot. Race and I'm pretty sure they used to be called Race. Yeah, Race Oncology. There we go. They've changed their name. I'm not an idiot. So let's just have a look at the chart. Oh, hello. Okay, so this is another case where share price went on a massive run. Share price pulled back a fair bit. And I think that pullback has come to an end. And this could be a time to buy some Race Oncology, because I probably would like to see a little bit more volume coming in. Volume has been fairly low recently, but I think the selling has come to an end. And the share price did drop a fair bit. Here it is. So share price dropped about 50% from its highs. So I don't mind this chart. I don't mind the chart at all. Medical investor, ready to move higher. I think it is ready. I think selling has come to an end. Since I ask, when will your 27 picks each portfolio predictions for 2026 be uploaded? So safe but growth predictions 27 and high risk and potential. I will release those. Not sure when I'll do it. I have the companies. It's not 27, by the way. I think I want to limit to 20 each. But I do have a group of 27 companies. I haven't decided exactly which 27 companies are going to be. So I've got a list here. How many do I have? 3, 6, 10. I've got 24. I'm undecided whether to pair that back to 20 or just go with 24. So, for instance, some companies include IPH, Austin Engineering, Coronado might include that because the share price has popped up. Coronado Global Resources, Zimplatz. So some of these have potential for significant growth over next year. Inero. So some of these companies whose share price have been bed down a fair bit. Nuix. I put Nuix. Oh, Lindsay. Camplify. Spark. Okay, so I'm not sure when I'm going to release that video, but within the next week, probably. Sensei also says D3 Energy seems to be breaking out. Falling wedge to only 83 million shares issued. Chart. Okay, and he's also mentioned CT1, Constellation Technologies. So let's have a look at D3 Energy. I don't know anything about this one. I've not looked at this one before. I'm assuming something to do with energy. So they listed back in May 2024. Share price went on a really big tear and has pulled back. This is fairly similar to the pullback of Race Technology. Share price pulled back 60%, and maybe the bottom has been reached. What do they do? Let's have a look. Very quick look. I'm assuming they're more of a story stock, that sort of thing. Main reason I say that is I would say or think that I have not looked at this company because they're just a, exploring company. It's not surprising. They're talking about petroleum here. And I'm going to have a very quick look just to verify. Yeah. So let's see if they have an about section. Australian listed helium and natural gas exploration company. There we go. Development of its flagship asset located in South Africa's Free State province. There was a show I was watching a few weeks ago, and one of the characters was talking about putting a lot of money into helium. I can't remember what that show was. Mustn't have been that good. Okay, so helium. And in the show, she did give a good thesis about why she was interested in helium, but I forget what that was. It does remind me of Race Oncology and share price going up, then dropping, and then maybe this is the start of the new uptrend with D3 Energy. I don't mind those sort of trades. And the other one you mentioned was Constellation Technologies. I don't know much about this company either. Oh, I have no interest in this one. And the main reason, why did you mention it? I won't mention L and Q because I am trading that right now. But why have you mentioned this one? Because the share price is at 0.2 cents. I have no interest in these sort of companies at all. And I would say the share price, I mean, it can't go any lower. Well, that's not true, can it? It can go lower. In fact, if you bought it 0.2 cents and it goes down to 0.1 cent, you lost 50%, and it could go to 0 cents. No interest in that company. Sean, oh, okay. If your name is Shane McClanahan, can you please come and see me? Because I got a lot of these spams, Cadden, FOMO hitting hard. Everyone in my group chat talking about Kuden nonstop. Feels like something is coming. So this is one I missed. This is one of these spams I missed. I have no idea what Cadden is. Must be, yeah. I just hate the spam in YouTube. So many spam. And what they've been doing now is putting the spam into your comments. And they used to have one comment and then everyone replied to that comment. And what they've done in the last week is instead of replying, they just put in unique comments. Cut in. And at one point, I had to delete 15 comments, straight comments about cutting. It's annoying. So what I do is typically I go to report, unwanted commercial content is spam, report, and then hide user on the channel. Paul says, can you please look at the chart of West African Resources and share thoughts with evaluation of the company? Thank you. I can do that. So I do own West African, not as a trade. This is a long-term hold for me, which is weird because I probably always say I wouldn't categorize mining companies as high quality companies, but they can be long-term trades. So this is more of a long-term trade than a long-term hold. So I bought, this would have been a long time ago. I forget when it was, when they just started mining. So 2020, 2021. And because gold price is going up, I have no reason to sell. Its share price just keeps going up. So again, this is another company where a lot of people will be turned off because of sovereign risk. They have projects in Burkina Faso, and there have been issues with the government of Burkina Faso. There was a coup d'etat a few years ago, that sort of thing. Share price dropped a lot on that day, but then recovered. There was an issue with the government wanting more of a stake in their most recent mine, and that's why the share price dropped a little bit. What day was that? Yeah, they were in a trading halt for a while, and then on 26th of November, they came back out of the trading halt. Share price went down 9.5% on that day. Share price closed at went to a low of that day of 260. Share price now 340. So share price has gone up, what was that, 33% since then. So it's really the price of gold driving West African Resources. Now, one of the reasons why I was keen to own this for the long term is because it had one project that was just delivering a mountain of cash flow. And they've got another project that's going to deliver a mountain of cash flow. And there is a bit of a discount to this company because of that sovereign risk. So that's the other thing about West African is that discount, but you do have to take into account that sovereign risk because who knows what's going to happen with Burkina Faso. They could just take this company's projects and anyway. So I was going to have a look at this. P ratio 11.7. Revenue growth the last 5 years 70.8%. Earnings per share growth 170.4%. 170.4% because they went into production. So your answer chart looks fine. And again, the price of gold is very important. If price of gold keeps on going up, West African Resources share price should keep on going up. Valuations of the company, I would say and still argue it's cheap versus other gold companies, but the reason it's cheap is because of the sovereign risk. So you have to be aware of that. I know a lot of people who refuse to even think about buying companies like this because of that sovereign risk. Ben Hutchison, Kneppy, you have a talent for going off the beaten track and turning up some rare gems. I just point out potential rare gems to you. And one of my strengths is I have a broad knowledge of or companies on the ASX, a broad knowledge. And I used to get really upset when experts will go onto those shows like Buy and Core. What was it called? The Buy and Core show on that show, Sky News. And now we have Ausbiz, the Core. And on occasion, you get people saying, I've never heard of this company before. And I'll be going like, how have you never heard of this company before? You're supposed to be an expert. And then I came to realization that a lot of people, for instance, Jason Siegel from Armchair Analysis, he is specialized in Aussie biotechs. He knows his stuff when it comes to biotechs. And we're just listening to him speak. I learned so much. I don't have that expertise in any sector, but I have a broad knowledge of all these little companies on the ASX. And a lot of these little companies I don't know a lot about, but I just know a little bit that I can speak a little bit about them. Now, when it comes to these three companies, so EtherStack, Veeam, and GWR. So GWR is the most recent company I did find, and I just had a look at. I have no idea what it was, and I just had a look at what was it. It was, I think, it might have been the most recent quarterly. I just had a very quick look at it, and I went, "Wait on." There was a lot to like about this company. They have, yeah, that's right. I was looking at tungsten companies, and then GWR popped up because they have a big holding in tungsten mining, and their value of this particular holding has gone up significantly, but the share price of GWR hasn't really translated, and they have a lot of cash on hand, that sort of thing. And I was thinking, gee, that's pretty attractive. And then I had a look at the chart, and I went, oh, the chart looks really interesting as well. More of a slow burn company, looks like, but the chart looks pretty good. The other two, EtherStack, I had a look at this and went, oh, now's the time to buy, and I didn't buy, and the share price has popped up. Yeah, so I was thinking buying around about 55, 56 cents. It was a really good time to buy, and the share price popped up. And that was on the 9th of January, 8.85%. I think still looks pretty good. They've released some really good announcements recently. I like it. And the other one was Veeam, which is a little bit different. It's just where the share price is in compared to a sort of like a support level, plus a lot of volatility in this one. And I could see potential significant upside. And the only reason I say that is because the share price has been $2 recently, twice in the past 2 years. So potential upside. Thank you for that, Ben Hutchison. Daisuke says, do you think Alpha Spread is worth it? I will say that. So Alpha Spread, I do have a subscription to Alpha Spread. Thank you to Sensei who got me onto this. It was a discount. What's the pricing? I think I got $99 and $20 per month. I forget which one I am. I must be on unlimited plan. So I paid $99 for the whole year or something like that. And I will do this. I will test out stuff like this. And I haven't signed in on this computer. And on occasion, I will go through and have a look. I don't think I can. Let me see if I can log in. Oh, no, it wouldn't be that. It would be my other account. Okay, yes. So unlimited plan. And I'll just show you. So for instance, I used this yesterday with Taiwan Semiconductor Manufacturing Company. And I have gone through quite a few companies I don't know much about. And all I want to do, and I think this is better for the bigger companies, because if you put in a smaller company, it gives what I think is a less reasonable valuation. What's a small company? We'll go Hillgrove. It's a smaller company, it says intrinsic value is 16 cents. Valuation history, yeah, there's not much data, I suppose is the best way to say it, when it comes to smaller companies. So I don't really use it for these type of companies. But when it comes to Taiwan Semiconductor Manufacturing Company, I will have a look. Now, it says it is overvalued, and you can go through how they get to that point. Now, this company was undervalued for a long period of time, and I bought in when it was really undervalued. But they do have like a fundamental analysis section. They do have a DCF section. Here we go. DCF value 1,481. Relative value looks at the valuation of the company compared to previous valuations of the company. So I do prefer relative value over DCF because I've found time and time again, companies are way too conservative, not companies, people, investors are way too conservative when they set up a DCF. Way too conservative. They don't put in the potential growth. They sort of think, what do you call it when you have a valuation and you want a lower valuation? Oh, there's a word for it. I forget what the word is. When you want to, it's terrible when you can't think of a word. The word will come up. Anyway, they tend to be way more conservative because they want a safety. Margin of safety, that's the word. So because they want a margin of safety, they tend to be really conservative. And for growth companies, they put in growth rates that are way below what the company's going to experience. And I saw this a few years ago with NVIDIA. This was a really interesting case. I can't find this article. So about 3 or 4 years ago, someone wrote, NVIDIA is the most expensive company in history. And then they did a DCF, a 10-year DCF of the company. And their projected 2032 DCF, or free cash flow for NVIDIA, was beaten within a year. So their 2032 free cash flow for NVIDIA was below the free cash flow NVIDIA that they experienced in 2023. And I just remember that. And this person was saying it's so overvalued because their free cash flow for NVIDIA was way too conservative. And that is a problem. And I did have a look at Taiwan Semiconductor Manufacturing DCF they had, and I went, that's way too conservative. Their growth is way too conservative. Anyway, so I think it gives you a nice little overview of the company. For instance, fundamental analysis, you can have a look at the growth. I think they have a 10-year growth, that beautiful growth. Research, there's a lot to like about this particular site. I love this revenue and expenses breakdown. Love that. And so there's a lot of things to like about alpha spread. But the question is, do you think alpha spread is worth it? For $99 per year, probably. I think Sensei did mention when the 12 months is up, unsubscribe, and then you get another deal. I might do that because I think it's worth it for $99 a year. Just acronym. Hi, Barry. I must have called myself Barry at one point. If you like or maybe Just Acronym has had a bit of a seizure, or what do you call it, a stroke, and he's got my name wrong. If you like HMC, have a look at JHX and REH2. Well, funnily enough, here's interesting. The whole reason I'm talking about this is I'm trading all three right now. And LP Foxing, I like HMC and REH charts too. Got in those when they broke out. We'll check out JHX. Oh, I mentioned, yeah. There you go. Okay. Sensei, okay. So let's have a look at HMC, the chart for all these. So this is a interesting chart. Funny enough, HMC was featured on Ausbiz The Core, and they just mentioned valuation. Oh, it's still expensive and stuff like that. I was like, really? No. I just care about the chart, this one. I don't care if it's expensive or cheap. The chart is good. Share price looked like it was breaking out. I still remember this day on the 5th of January, share price went down 4.96%. And I should have said I did say to myself, this could be the time to buy. And then the share price had broke out a few days later. And this is exactly what I'm looking for. Now, this breakout is not on any financial news, not on any announcements, but there is potential that maybe that they might release something positive. Now, I've always called this as an asset manager. And one of the good things about this particular Ausbiz The Core show is they refer to it as a REIT manager. And that's probably a good way to say it, but I think they're a little bit more than that, if I remember correctly. But anyway, I like this chart. The other one was Reese, so I did buy Reese. By the way, I had a look, like the quality of these companies would be in question. So HMC Capital, I'm not sure if I'd ever even consider it to be a high quality company because of what do they do. Asset manager, yeah, it's not my sort of thing when it comes to companies. Reese is a company I've been umming and ahhing about whether it's high quality, and I actually have a little bit more confidence trading high quality companies because there is better potential upside, even if you get a little bit wrong. So I'm more willing to trade high quality companies. Wouldn't say I have high conviction, but I have a little bit more. I would say, yeah, I don't know how to describe it. But when I saw Reese, and because I was umming and ahhing about it, I went, I suppose the best way to say it is I did put this into my super, even though I'm training it. And the way I look at it is it's high quality company. I think there might be good value here. And if the trade goes against me, I'm willing to hold it for a little bit longer. That's probably the best way to say it because it's high quality. And over time, high quality companies should increase in price. And now Reese, whether it's high quality is debatable because the share price dropped a lot. But I did have a look at this company back in 2024 and I went, this is so overvalued. There's no way I'm going to buy it. And the reason I looked at it is because when they released results in February 2024, the share price popped up. So this is a case where the share price popped up 18% on results. And I had a look at it and went, hey, there's no way I'm going to buy this just because of valuation. I don't care if the share price popped up. And that it popped up on good financial news. It's just valuation, and valuation does matter. And research has shown that when you make a trade and you trade value, like good value versus overvalued or undervalued versus overvalued, you're more than likely going to outperform when you trade undervalued versus overvalued. And I think this is a good case. Reese, in my opinion, was overvalued at that point. And I got into a big debate about this with someone. I just said, look, look at the valuation. And they said, oh, no, P ratio of 50 is fine for this company. I went, no. And yeah, share price got to 29 and now it's 14.50. And for me, that points out to potential upside because this was 2 years ago. The company probably will grow, but that's potential upside if everything goes right. And the other thing is the chart looks good. I like the chart. And the other one was James Hardie. This is another one where I've been umming and ahhing about the quality of the company. It has all the characteristics of a high quality company. And I bought on the 18th of November. They released something positive. Even though the chart looked really badly or terrible, I just went, oh, I'm going to buy on this. I think the bottom has been reached. And the share price, the company is attractive enough valued that I think, yeah, that's what I thought. It wasn't so much a trade. I just thought there was good value with James Hardie. And they did release a good announcement. And the share price has taken off. I haven't been really following James Hardie since then because this is in my super. And I'm not really trading it. That's not why I bought. It was just high quality company, trade. No, buy for the longer term. Hopefully I've been clear about that. So HMC and REH are more trades. HMC is 100% trade. Reese is more of a trade, but if I don't see the chart, if the chart's not going in the direction I want, I'm more likely to hold that for the longer term. And James Hardie is just a high quality company that looks good value. And they release something good. Stevie Simon says, requesting Stack. In tomorrow's episode, I did not look at Stack, fintech, which pivoted last year inside several large US companies. They are cash flow positive by mid. Well, you're saying they are cash flow positive, which is a absolute by mid 2026. So nothing in the future is an absolute. So the best way to phrase that would be they have the potential to be cash flow positive by the middle of this year. So you're right. The company did release or has released some really big announcements recently over the last maybe 3 months. Not recently, in the last month. There we go. Signs with Peninsula Financial. There was another big one as well. T-Mobile. I think the share price went up a lot. SoFi, ARR to exceed 8 million in projection. Cheese record monthly revenue in October. I do or am paying close attention to this company. The chart looked really good. Share price has pulled back. I think the low is in, so 3.1 cents. If it could get there, I'd be liking that. But I could see this moving in either direction, but I think maybe the selling has come to an end. And you can definitely see the share price just popping up on the news. So it looks like the big one was the 18th of September, which I don't have here. 18th of September was, Robinhood. I remember that one now, even though I was overseas. I did see this announcement. Robinhood selects Stack as vendor for new banking solution. And then the 30th of September, T-Mobile USA selects Stack. So this was a little bit further, longer ago than I realized. Anyway, share price has pulled back since then. And it's going to be really interesting to see their pennies 4C. Oh, that's the wrong one, sorry. It's going to be interesting to see the most recent pennies 4C. Let's have a look, because their IRR is increasing at a nice rate. Here we go. And I could imagine that this would be a really good pennies 4C, but $871,000 in receipts the last quarter. And if I see significant growth, this could not be a trade. This could be more of a longer term hold. Pee-wee said something I wouldn't say I have strong thoughts about, but I don't think doing a share buyback when a company is overvalued is a good thing. But I've always thought, does the management of a company understand whether the company is undervalued or overvalued? I think they will always think the company is undervalued, but would they ever think, well, we are overvalued? I'm not sure if they ever thought that or think that. Anyway, Pee-wee says, just a thought, I think capital allocation at Pro Medicus buyback is stupid or at least misplaced. Buying back stock at approximately 200 times earnings is courageous. I've got another word for that. But then they are probably very optimistic about their future. So that is a way to think about it. They might be thinking, we are undervalued based off potential. Anyway, so in my opinion, capital allocation is the most important decision a company like this has to make. What are we going to do with the money we are creating? Dividends, acquisitions, buybacks. I'm not sure if buyback is the best allocation, capital allocation in this instance. I don't know. I doubt it because of the valuation. And I'm just, maybe, I don't know, maybe in 5 or 10 years, it'll be a great decision. And the reason I'm saying that is CSL did a share buyback. CSL did a share buyback when the share price was on a massive tear. Or maybe it was 2015, 14, something like that. And I thought that was a bad decision. And it was more inspired decision than anything else because the share price kept on going up and up and up. But I'm not sure if that was the best decision then, just like this one with Pro Medicus. Josh Ackerman says, why is Ampol and VAA down so much? I have no idea. I was trading Ampol and I got out. It was a little bit too, I don't know what it was. I just didn't like the chart. So I got out. I think it was before this big down day. I'm hoping it was. Let me have a look. I got out of Ampol ALD on the 8th of January. So it was this day. Okay, so it was just before that big down day. Yeah, I don't know. I didn't really delve too deeply into why Ampol share price was dropping because they hadn't released anything. I wasn't that concerned. This was just a trade for me. No news flow from the company. Something must have shifted within this space for the share price to move into this sort of go down. And this was enough for me to sell out of my trading position. And I had no qualms about it. Let's have a look at Viva Energy. Is it the same? I don't know. I have no reason why the share price has gone down. Maybe it's just maybe analysis has a negative opinion about both companies moving forward, and they just decided to put a sell signal in or sell call in. I don't know. Keely says, Rumble Resource, a breakout. RTR. Let's have a look at Rumble Resources. Yeah, this is nice. I'm not going to say anything badly about this chart. It's a nice chart. For me, the breakout would have been back in September, October, when the share price was about 4 cents. And we had the pullback, and look at the volume, keep an eye on the volume. Volume looks really good. We had another spike at volume on the 14th. Yeah, a little bit of volatility the last few days, but the chart for Rumble Resources is good. I have no idea what they do. No idea at all. In fact, don't even know the size of the company, but the chart looks good. $65.9 million market. Chart looks pretty good. Weekly chart. Oh, a lot of excitement in this company back in 2021. Chart looks good. Oh, is it a break? What do I define this as a breakout? I think this is more of a continuation of the uptrend. Although by definition, it's a breakout. Share price did get to a long-term high, so it's a breakout. But yeah, I'm being a little bit picky with my definitions of breakouts. Kelly Ma says, hi, Kneppy, VMM, Viridis Mining and Minerals. How do you read the charts of today? Thank you. I am trading this one. I took a little bit more notice to this company because it was featured in Bell Potter's something or other. Share price went down a fair bit. Then they released something on the 22nd of December. Share price popped up 30% or 39% on that day. And then the share price went sideways and went, that's a good sign. And the share price, I think, has tendencies of showing signs of moving upwards and upwards and upwards. I'm not sure how far, but I do like this chart. And that's the reason I took a trading position in Viridis Mining and Minerals. So I like the chart with that Kelly Ma. Okay, I replied to that one, so I don't have to talk about that. Oh, Armchair Analysts has 15 thumbs up. So thank you to Jason Siegel from the Armchair Analyst for giving me his time. And I learned a lot from Armchair Analysis. And if you go to that video, if you want a link to his newsletter, and there was quite some nice comments about Mr. Jason Siegel and that particular newsletter. And I think it's a really good newsletter, particularly if you're focused or want to become more learned when it comes to ASX biotechs. So thank you, Mr. Jason Siegel. Hi, Kneppy. Would you be able to find some time this coming weekend's doing a member-only video on my trade, just like you did on 19th of December? Thank you. Yes, I can do that. And I probably want to do that every month, I suppose. And since I last did that on the 19th, I'll do that this or tomorrow. Look out for that on Monday morning, Kelly Ma. And also Kelly Ma, by the way, Kelly Ma is a member. And if you want to become a member, join. It's not a lot. And you get special videos. Lindian Resources, a breakout today. Thanks, Kneppy. Okay, let's have a look at Lindian Resources. Yeah, this one is just an uptrend and a beautiful uptrend at it. So for me, the breakout for this one. So this is, even though technically you're probably right, based off my definition of a breakout, what I tend to look for is see the share price of Lindian not doing much, and then all of a sudden the share price went up a lot on the 6th of August, 33%, and then it went up at a further 37% on the 12th of August. That's the breakout. And the share price just keeps on. There's a lot of positive momentum behind this one. The share price keeps on rising. And this would have been a nice little pullback to buy. Nice pullback to buy. So not really a breakout that I'll be focusing on. And I doubt they release any news flow. So let's have a look at why the share price broke out on the 6th and 12th of August. See if we can learn anything with this one. 6th and 12th of August. 6th of August, it was rare. Oh, they released strategic partnership with the Luca for funding and offtake. It was not mentioned as price sensitive. So strategic partnership with the Luca. And then the 12th of August, there was nothing. It was just stage 2 mining license expansion approved. It was just positive momentum, I think. And that to me was a breakout. So you can see the difference. So this is more, what's happening now is more of a continuation of the uptrend for Lindian. And this was sort of, and also look at the volume, really big volume coming then. So that was the time to get onto Lindian. I suppose even now could be a good time because the share price keeps going up. Flying Kiwi says, IIQ is my pick. Could be an industry changer. Will save a lot of lives. I'm 100% sure. So this is another case of someone having a lot of conviction, high conviction about this particular company. 100% sure. I have never, ever been 100% sure about anything in my life, except death. I'm 100% sure I will not die. I am going to live forever. That's one thing I'm 100% sure of. Yeah. Anyway, so I just, very important to know yourself. And I know myself, and I know that I will never develop high conviction about any company unless I'm running it. That's when I might have high conviction. Anyway, let's have a look at IIQ. I have no idea what this company does. Innovic. Okay, the name is familiar. And I'm assuming, which is a bad thing to do, that this is more of a pre-revenue biotech. Funded to accelerate development of Innovics ovarian cancer tests. That does sound familiar. And therapeutic program. And we've learned today, hopefully, therapeutic is a combination of, oh no, it's not. That's theranostic. Sorry, therapeutic is a combination of therapy and diagnosis. Okay. Well, they have a little bit of receipts. How are they getting receipts? What are they selling? I'd like to see what they're selling. How they got receipts? Do they sell a product? I don't know. Here we go. Operating receipts, 209,000 from Exonet and HTERT sales. So they actually do sell something. There you go. They are post-revenue. They are selling something. Exosome Technology, which is advancing next-generation diagnostics and therapeutics to transform cancer care. So they're theranostics, diagnostics, therapeutics. Ovarian and breast cancer. So we all wish this company succeeds what they're doing. Let's have a look at the chart. IIQ. And what's the market cap of the company? Let's see, 54 million. Chart is meh at this point. So maybe this is one where they just need some good news coming through. Share price went up a lot on the 2nd of June, but then dropped almost immediately. So that announcement was not all positive. Thank you for that, Flying Kiwi. I'll have a closer look at no, it's not Invocare, Innovic. Oh, some really interesting insights from Blacktop Images. He is an artist who put some niche artwork up on Article, Redbubble. He's had some artwork on there for 15 years. Sales have gone down steadily year on year. I got my remittance for the first time for the last year yesterday, and nearly 20% of my profits were eaten up in new fees. It's the lowest year-to-date payment I've had from them, and my sales are actually slightly higher than previous. They're moving towards a slop framework where people from third world countries just jam up new artworks every day, flying the page with slop in a hoop to catch some sales, drowning out artworks that actually have potential. There you go. So it's not some negative comments from someone who might know more than what I would do, or what I do. Business has no future. There will be only mass uploaded slop and AI generated rubbish. There you go. So that is article. I'll be honest with you, I have no interest in article. As I mentioned before, I did go to the website many years ago and they were expensive. And yeah, the chart, long-term chart is horrible. And they changed the name from Redbubble to article. And that's actually a red flag for me, since we're jumping on the hate article bandwagon. Oh, designation 8. If you could only invest in a quant fund or a traditional hedge fund, which would you pick and why? Okay, this is interesting. So quant fund uses statistics, all that crap, mathematics, or traditional hedge fund uses people. They say, I'm the knowledge here. I'm going to use my thoughts on a company. That's probably a really bad way to say it. I would use a quant fund, but I am more scientifically and mathematically, I wouldn't say grounded. I have more of a background in mathematics and science, and I would just think that works better. Maybe there's statistics around that, which I don't know. Maybe there's not. Traditional hedge fund, I don't know. To be honest with you, I wouldn't put my money into either. And the other thing I should mention, I would assume, and this could be a really bad assumption, I would assume there's probably no such thing as pure quant, or maybe there is. I would say there is no such thing as traditional hedge funds anymore. And what I mean by that is I would say a lot of traditional hedge funds use a lot of quant. They do a lot of quant stuff. So maybe you could say most funds or hedge funds now are more like hybrids, using a combination of quants and people. So quants for me, but I would love to know if there's been any research done on that. Which one has done well over the last, say, 20 or 30 years? But I say right now, it's more hybrid. And to be honest with you, I would invest in neither. I'd like to have control over my own money. Kalimar, is Tower a high quality company? Also, does Nappen break out today? Up 10%. Okay, I think I've already talked about Appen, so we can move on to just looking at Tower. So Tower's chart is amazing. And let's have a look to see if it's high quality. Based off my own criteria, which is very important. I have my own criteria for high quality companies. And I would say your criteria should be different than mine. Find what works for you. Tower Limited, it's a New Zealand insurance-based company. Oh, also Pacific Islands. There you go. Founded in 1869. Wow. There you go. So revenue growth, tick. Earnings per share growth, tick. So nice growth in both or all those. In fact, if you have a look at earnings per share and revenue, the growth has been accelerating, which is probably another tick. I would assume margins, gross margins 20.6%, operating margins 19.2%. I would want to know what is the normal margins for an insurance company. That looks okay for me. So it's like at the qualities, it's in the quality spectrum right now, or high quality spectrum right now, based off growth in revenue and margins. Return equity, return invested capital, 9.2% and 5.8%, probably lower than what you would want for a high quality company. But there might be reasons behind that. And maybe insurance companies have low return equity and return invested capital. Will be honest with you, I've never done any research on insurance companies. For some reason, I just don't find insurance companies attractive. I don't know. P ratio, 8.7 looks really low. There could be reasons. Maybe there was a one-off. Now, what you could do is have a look at the chart for Tower. And the daily chart looks really good. Share price pulled back recently because they went ex-dividend, 14th of January. I'm pretty sure they went ex-dividend. And if you have a look at the weekly chart, in fact, the weekly chart is a chart really not of a high quality company. Share price went to a high back in 2015. The share price just plummeted. What happened then? Share price went from $1.75 down to 50 cents, then went sideways and has just gone berserk over the last 2 years. Why? Why is that? But this is not the chart of a high quality company. Has some metrics of high quality, but those metrics are looking at the last 10 years, which is an interesting period. It's gone through a cycle, it looks like. Anyway, for me, maybe not. More of a trade, but the daily chart does look good. Okay, Fantastico says, do you hold your trades through reporting season, especially for high beta, specky small caps? Appen's financial year reporting going to show zero growth unless Q4 results explodes. Okay, hold trades through reporting season. Yes, I do, particularly for high beta, specky small caps. And the reason behind that is the annual report, half-year report for many of the specky companies is inconsequential because they're more story stocks. Revenue does not matter for those. For Appen, I'm more interested in their Q4 results, and I could see it going pear-shaped. So, and the reason behind that, we've already seen it in the past. When Appen releases their results, quarterly report, share price takes a big tumble. We saw that. I'm pretty sure. No, it was the half-year results last year. 26th of February, share price went down 33.33%. And that is concerning to me. So there is a chance I might take profits with Appen before they release their results, just because of what happened last year. So it is a potential with happen. But for many of my other specky trades, the results are inconsequential because it's, for me, half yearlies and yearlies and quarterlies is all about numbers, about revenue, receipts, growth, that sort of thing. And for the specky stocks, they have no revenue. Stoic Wisdom, I'm curious. I'm Kneppy. Glad to meet you, Curious. Do you invest in Canadian stocks? If so, how? Yes, through my super, where I can invest in companies listed on international exchanges. So that is how I invest in Canadian stocks, through my super. I'm wondering if you can invest in Canadian stocks through any other platform like Stake. I'm not sure. But I can invest in Canadian stocks, American stocks, Japanese, Hong Kong, Dutch, German, French, Swedish, Italian, Spanish. I'm probably missing a lot out there as well. I can invest in many companies on those exchanges, not all, but many companies. And that is how I invest in Canadian stocks, through my super. Net wealth. For those who don't know, it is net wealth. What's it called? Accelerator Plus. Here we go. So Accelerator Plus, 2 platforms, Wealth Accelerator Plus for non-super investments and Super Accelerator Plus. In fact, I'm going to verify that. It must be Super Accelerator Plus. Let me verify, although it does say here offering extensive investment choice for, or like ASX shares, international stocks, managed funds, and wholesale options. And super, it just says S plus. Oh, account settings. Maybe I have to look at account settings. Oh, I've got to change my address as well. Super Accelerator. Oh no, wait there. That's if you want to open an account. I don't know. It's probably Super Accelerator Plus, because I do invest in individual companies through that. International stocks, yeah. There you go. So have a look at that if you want more investing choice. And finally, Ben Hutchison, I've topped up my ABV holding for the 3rd time yesterday. Seems to fit your high quality criteria. Although, to be honest, I haven't checked ROE, a borrowing stock, in the best possible way. Let's have a look. Let's have a look-see at ABV or ABT, Advanced Braking Technology. I always get this mixed up. Company is Advanced Braking Technology, but the ticker is ABV. Let's have a look. No problem with growth in revenue and earnings per share, which is no surprise. So that gets a tick. It's growing. Let's have a look at gross margins. Probably operating margins. I'd like that to be a little bit higher, but I would assume there's a chance that operating margins would increase over time. That is what you would want to see for these type of companies. A nice general increase in margins. A return equity and return invested capital 5-year average at 17 and 19.5%. Yeah. So there's a chance. Oh, no, I probably wouldn't. I do have a high-quality screener, and let's see if it pops up on this screener. It might not because of margins. Let's have a look. We've got a lot of small companies here. Oh, it is. It has popped up on my screener. Yeah, it's just popping up. So their margins, oh, I look at gross margins. That's right. Yeah, so gross margins are fine. Yeah. So it's one of the smallest companies that pops up on my high quality screener. And some of these companies I probably would ignore, like Orient Equities or Gumtree Australia, 360 Capital, Prime Financials popped up, Boom Logistics, EZZ Life Sciences, Atlas Pearls, probably ignore that. It's more of a commodity company. Globe International, SDI, not sure about that one. Osco, in fact, I own quite a few of these. Corvest, Osco. I own a little bit of EZZ. I wasn't sure if I called it high quality. Boom Logistics, I do own that. And Prime Financial, own that as well. There you go. So it does pop up on my high quality screener. There you go. Boring stock, and I agree with that. If a boring stock can be a good stock because if you just have a look at the chart for this one, oh, that's right, got it wrong again, ABV, not ABT. It's a beautiful chart over the long term. There you go. That is all I have for this particular answer and reply video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.